Right, checking out the S&P after Friday's move lower. Point of control from the move off of the March rally is now at the all-time highs, or near the all-time highs at 75.85. Nice little topping process. We saw that in the way of Core 1M. I'll bring that up real quick. Anytime Core 1M drops in here below the 9s and 8s even, it signals that there's very few stocks participating within the market rally or the direction of the market itself. And once we come outside of this area, it's generally due to a multitude of stocks recorrecting together downwardly, which causes Core 1M to spike back up. And then when Core 1M gets to generally around the 18 level, we tend to see things balance out. Obviously not exact science, topping tails over here, and we do have breaks and extremes. So this is just generally the area where we look for the potential for a market low, so long as we see other signals. And so now we see Core 1M closed on Friday at 14.52, which would suggest to us that excuse me, Core 1M still needs to move a little bit higher. And again, it doesn't have to be a directional right into it. You see a lot of these stutter steps leading into it. But generally, when we do break back above the lower threshold, we run into the upper threshold, which kind of signals more buoyancy within the market itself. So anyway, back to the SPX index. We have a nice pocket of high volume here from 73.60 up into 74.25. That was within the closing price of the market on Friday at 73.83. So long as we can maintain this, high volume node, not much damage done, right? We would believe that we have a trailing 61.8. We'll follow that as the trailing point of resistance at 75.24.53. The only issue, of course, again, is that we generally see Core 1M spike higher, which would suggest to us that price needs to move lower. And the next point on the SPX index where we really have any volume and a retracement overlay is at the tertiary 38.2, 71.22.78 in this range at the previous support. And then below that would, of course, be the back test of the previous all-time high from back in the beginning of 26 at 6,963, where there's clearly a substantial amount of support. Again, not advocating for this to come to fruition, just saying that this is how these high volume nodes generally work. And so if we break below this node, and let's just call it there's a multi-bottom here, let's call that 73.40. So I mean, you break SPX below 73.40, and then you risk that pocket through the low volume node and into the next supportive point at that 71.22.78. If we do hold above that 7,340, wherever this ends up going to will be our next resistance or our trailing resistance. Right now, like I said, 75.24.53. And then above that, we also have the point of control up here from the rally. So this this range here is just all potential resistance. And so that's what we're left with. We will watch Friday, or we will watch Monday for market action. If we are below that level, pretty simple, stay short and remain short into support at 71.22. Hold this bottom, and it's more of a consolidative process from 73.40 up into 75.30. And then above 75.30 opens into resistance box to all-time highs, this 100-point range. And then if we do break all-time highs, then we would target that 77.7680. How patriotic. So anyway, that is the SPX. That's what I'll be looking for next week. Hope everybody has a great weekend, and I will see you on Monday.